Hey guys, it is Patrick here, your San Antonio-based real estate agent, and in today's video, we're going to be talking about the most important step to purchasing a home, especially if you are going to take out a mortgage on your new purchase. If you're going to go in all cash, then you probably don't need to do this step. But for most people that are purchasing a home that need to take out a mortgage, this is the number one step. And often we call this step number one, although I still think you should hire a real estate agent first. But I understand either hiring a real estate agent first or doing this, both of them are critical to the success of purchasing your home. Now, what we're talking about is this pre-approval, pre-qualification process. And these two words are used synonymously between mortgage people, between real estate agents, even between buyers and sellers. But this is a critical point that has to, or critical step that has to be done in order to properly ensure that you're on the right track when you're searching for a home and when you are buying a home. So that's what we're going to kind of discuss here, is help you understand the difference between pre-approval and pre-qualification. Both are important to purchasing a home. So if you are ready, let's talk a little bit about what this all is about. Now, prior to house hunting, the smartest thing that you can do is to get pre-qualified or pre-approved. And why is it the smartest thing? Well, it's the smartest thing for a lot of reasons. The number one reason is it tells us, me as the real estate agent, you as the buyer, what is your capacity to purchasing a home. Now, that is your capacity. That's your max amount that you can qualify given the certain circumstances that you have financially. Now, that doesn't mean that that's what you should buy, but it gives us an idea. And why is this so important? This is so important because we don't want to, as real estate agents, show you homes that are outside your capacity or your price range, because we don't want you to necessarily fall in love with that home and be devastated when you can't get approved for that loan. Now, nowadays, more and more sellers are requiring that in order for an offer to be received, you must have a pre-qualification letter attached to that offer. This also goes with new construction. A lot of times new construction is going to require you to submit a PQ application so that they understand your capacity before writing any contracts for a new construction home. And so your real estate agent should be pushing you hard about getting your pre-qualification letter or pre-approval letter prior to the search, or if you have a great understanding of your finances, maybe they can back off a little bit, but they're still going to need it in order to put an offer on a home or to walk you into a new construction community so that you can buy a new construction build. So understand that this is an important factor in order to make sure that you have success in purchasing a home. Now, lenders often use these two words when we talk about pre-approval and pre-qualification, almost interchangeably and synonymously, but we're going to really discuss these two based on their definition. So we're going to give you what their definition actually is so that when you are speaking to a mortgage lender or you're speaking to your real estate agent, you're all on the same page as far as what's being done to make sure that you qualify for the loan. So, but we know either way, a lender is not guaranteeing that they will approve you for a loan. So one thing to note about pre-qualification and pre-approval is that when the lender gives you that pre-qualification, pre-approval letter, there is a little bit of a asterisk attached to that letter. And that letter is basically saying, hey, based on the information that we've collected or based on the information you told us, this is what we would expect you to qualify for, or we would qualify you for this amount based on the information you've given to us. But they still have to verify it all, and they have to verify the transaction. So it's not a guarantee that this will happen approval-wise, but it's a good start to the home buying process. Now, what's the difference? Let's start with pre-qualification. So pre-qualification is a process in which you as the buyer will self-report information to a mortgage loan originator who will then use that information to estimate how much house you can afford. And what that really means is that you are giving up information to someone, a mortgage loan originator, and they're going to basically put it into their computer system and kind of see, based on that information, what would you qualify for? Now, it's important to understand that the results of that qualification is based solely on how honest you are with that mortgage loan originator. Everybody wants to try to push up their income a little bit more, pull down the debt a little bit more. They want to do everything they can to get that pre-qualification letter, but then at the end of the day, when they actually go through the mortgage loan process, application process, they're going to be devastated because they can't qualify it, because they inched up their income a little bit too much than what they really got, and they inched down their debt more than what they, or inch down their debt so that it seems like they have less debt than they really have. Now, part of this process also includes pulling your credit report. Most mortgage loan originators will pull up a credit report, especially if you do it online, because it's done automatically. If you're talking on the phone, they may not necessarily pull up your credit report, but just understand that a credit pull could happen as part of this process. So again, the information that goes in is only as good as the information you give to that mortgage loan originator. And it's going to be good to be as honest as possible so that you have a good idea what your capacity is when you start to buy a home. Now, let me give you some examples of different pre-qualification letters and what they would look like. So this one's a general pre-qualification. It basically gives the buyer an understanding of what they can afford. So congratulations, based on the information you provided, we have been able to pre-qualify you for a mortgage loan up to $175,750 for the purchase of your new home with a sales price of $185,000. So that's our capacity for this particular buyer. And as a real estate agent, my job is then to go search for a home within these parameters, at least from a finance standpoint, so that we're not showing you $250,000 homes that you couldn't qualify for. So super important step and super important information for your real estate agent, whether it's new construction or pre-owned. We need this information so that we can make better decisions on your behalf, especially when it comes to showing you homes and not not causing a lot of time suck, what I would say, where we're just showing you a home that you couldn't even afford or not in your price range. Now, obviously, it says that the details associated with this pre-qualification review are contained in the attached conditional qualification letter, and then it just tells you what the terms are. You know, this is good for 90 days, and that this is not an approval for a loan, but this is just based on information you provided to the mortgage lender. So this right here is kind of a broad, like, here's the amount you should be looking at. Let me give you a little bit of a narrower pre-qualification letter. This is a more narrower pre-qualification letter in that it gives us what the purchase price we're looking at, okay? And so this case right here, purchase price $330,000, loan amount $313,500, qualifying interest rate is 3.75%, 30 years, loan to value of 95%, and the loan type conventional. And then it just basically says kind of the same thing at the very end. This is actually my pre-qualification letter from when I purchased my home. Luckily, I brought down the rate because 3.75 is crazy high at this point in time. Check the date of this video and you'll understand why. But this is my pre-qualification letter. So when I sent the pre-qualification application to the mortgage lender, I said, hey, we're looking to buy a home that's $330,000. Would I qualify for a mortgage like that based on the information that I've provided to you? And this is the report, or this is the letter that I got back saying, yeah, we'll approve you for that. And here's the qualifying terms based on the information that you provided to us. So two different letters to give you the kind of the same result as far as capacity. Now, a pre-qualification, or what we often call PQ, is not an obligation to approve you for a loan, nor does a PQ give you absolute assurance that you will be approved for the PQ amount. So it's not a definite thing at the end of the day, but here's a reason why. A pre-qualification, again, is based on the information you have given to the mortgage loan originator without verification. The lender will still need to verify the information that you've given to them. So they still need to make sure that all the information that you gave to them is accurate, and they're going to check that by getting your bank statements, getting your W-2s, getting your tax returns, pulling your credit report. They're going to get all of this evidence to substantiate all of the information that you provided in order to make that PQ happen. So understand that there's still a process of checks and balances at the end of the day, and we can't just take your word for what you make income-wise, what you have in debt, and what your overall financial picture might look like. Now, that's pre-qualification. So without verification is the important part of pre-qualification. The next one here is the pre-approval. Pre-approval is another layer of qualification that you can have done. And a lot of mortgage loan originators, if time is on their side, will ask to do a pre-approval rather than a pre-qualification, because it's that one additional step that gives you a little bit more assurance that your loan will be approved. So this is a process where a mortgage loan originator verifies your financial information and approves you for a loan with contingencies. Contingencies are things like, we're going to approve you. However, if this happens, we will not approve you. So it's kind of like you're basically approved, but we've got some contingencies just in case you break them, then we can take that approval back. So that's kind of what contingency means here. So although you may be approved for a loan, it is only 1/2 of the approval process. The mortgage loan originator will also need to approve the property that will be used as collateral. So when we think about the application process, we have the approval of the buyer, and then we have the approval of the property. In a pre-approval process, we approve the buyer, and then we have to wait because the buyer hasn't chosen a property, or maybe they have, but we still haven't done the due diligence. Then once we've done that, we're going to approve the property. Now, if you do a pre-qualification and you give an offer and it becomes a contract, your mortgage lender will do both the approval of the buyer and the property at the same time. With a pre-approval, the pre-approval of the buyer happens first. Then that couple goes out and searches for a home. And then once they pick a home, then the mortgage company will then approve the property once that property is selected. So it's kind of like a 1-2-step process versus if you didn't do a pre-approval, both of them are done at the same time. Okay, so the mortgage loan originator will also need to approve the property that will be used as collateral. So again, if the mortgage company is going to lend you money, they want to make sure that the asset that you're buying, the home that you're buying, is going to make sense for them to lend money so that you can buy it. And so that's where an appraisal will come in for them to appraise the property to ensure that it's worth what the loan is going to be at the end of the transaction. Now, as long as your financial position does not change significantly from the pre-approval letter and the property satisfies the lender's requirement, the loan will likely be approved. So you're in better terms when you're pre-approved because you can be almost assured that the lender will approve you, but now we're just making sure that we get a property that will appraise appropriately so the lender is confident that they won't lose money because that property is worth way less than the loan that they're going to give to you on that home. Now, there is a slight delay from if you want to choose between pre-qualification and pre-approval. And the reason why is with a pre-qualification, you can almost do that over the phone. You can call that mortgage loan originator, they're going to get some information and they can spit out a number because all of that is going to be based on your information that you give over the phone. Pre-approval, though, takes a little bit of time because they need to verify documents. There needs to verify all the information that you've provided to them, and that takes time. So there is a delay that happens when you do pre-approval versus pre-qualification because of the verification that needs to occur with a pre-approval. So understand that if you are in a hot market, and you are wanting to put an offer on a home, you may need to go through the pre-qualification route so that you can get the PQ letter to attach to your offer. If you have a little bit of time on your side, it might be advantageous to do a pre-approval, because once you have all of that done, then you have a smoother transaction on the other end because you're not trying to verify all of the income. Now, that doesn't mean that once you're pre-approved, you're not going to have to provide additional documentation. Of course, the mortgage company may ask you for additional documentation to substantiate some of the things that they're looking at, but at the end of the day, it becomes a smoother process with a pre-approval in hand than a pre-qualification on hand. So the delay for a pre-approval versus a pre-qualification is up front. The delay on the front end will stop you from looking at homes, but you could have a smoother back end. As you know, you've jumped through one hurdle. That's the approval of the buyer in a mortgage loan situation. Now, why is this important? We kind of talked about it throughout the whole video here, but getting either a pre-qualification or a pre-approval is necessary to ensure that you are looking for homes in your price range. You don't want to look at properties that are outside your price range and fall in love with a property you can't afford. So that's the number one thing we want to ensure. We want to ensure that you can afford the homes that we're looking at. Otherwise, we're just wasting everybody's time in showing you those homes. It can also give you an advantage in a multiple bidding situation because it shows to the seller that you are serious and the chances that you will close on the home is higher. Now, I want to tell you, nowadays, most sellers are going to require a pre-qualification letter or a pre-approval letter to be submitted with the offer. So it's almost like we've kind of turned that bend of, you can put an offer and then go and see if you can get a loan. But now it's like, can you get a loan first? And then from there, we'll take a look at your offer. So it's almost, in this situation, a multiple bidding situation nowadays, everybody's going to have a pre-approval or a pre-qualification letter that is attached to their offer. But the terms of that qualification may put you in a better situation. So for instance, if you have a whole bunch of, if the seller has a whole bunch of buyers who have maybe a USDA loan versus a conventional loan. A conventional loan may close faster than a USDA loan because you need approval from the USDA for that loan. And so the buyer might go, or the seller might go, I'm going to go with the conventional loan rather than the USDA loan because that's going to close quicker and probably with less headache. So understand there are some non-monetary advantages of having pre-approval and understanding what type of loan product that you've decided to take out. So again, understanding that it's important through the entire process. Now, at the end of the day, you and your real estate agents do not know if you will qualify for a loan. So, when I talk to prospective buyers, the first thing that I want to know is, can you qualify for a home mortgage? If you can't, then we're basically wasting both of our times because I'm going to show you houses, but then I can't put an offer on that because we just don't know if you can afford it. And so we want to mitigate that by making sure that you can qualify for a loan. And it takes 15 or 20 minutes a lot of times when you do a pre-qualification. And frankly, you can do that using a link on an app and just typing in your information and then waiting a day or two for the loan officer to get back to you and say, hey, we're pre-qualifying you for X amount, or we can't pre-qualify you because of these circumstances. And if we know that information, then we can work on trying to get those things, those derogatory things off your credit report, or maybe it's your debt that you have to work on, or whatever is stopping you from getting pre-approved. Those are the things we can work on so that we can get you on the path of buying a home. So that is a look at pre-approval versus pre-qualification. Like I said, nowadays it's standard. Like, this is your first step. Whether you do this with a real estate agent or not, my suggestion is to get a real estate agent first and then have them walk you through this process. and then also use their connections. So a lot of real estate agents have connections to different mortgage lenders that they trust, and in that trust, make sure that you'll have a seamless, great experience through the process. So hire a real estate agent, and then make sure you get pre-approved or pre-qualified by a mortgage loan originator. So I hope you enjoyed this video on pre-approval and or pre-qualification. If you liked what you saw, make sure you give it a thumbs up. Have you purchased a home and been pre-approved or pre-qualified before going out? Put that in the comment section below. And if you haven't, why haven't you done that? Put in the comment section below. Make sure you subscribe to this channel and turn on the notifications. That way you're alerted to the next time I post a video to this channel. And if you know someone who's looking to purchase a home in the near term, make sure you share this video with them so that they know that they should get pre-qualified or pre-approved before going out and looking at homes. So until next time, we'll see you in the next video.